What is up, Mile High Market Mastery Live? We are trying a couple different things today, so I'm excited to dive in. But today we are talking about all of your questions, and this is something that is kind of fun to do. So let's roll. If you're a homeowner right now, you are absolutely wondering, what should I make of all of this news? Just today, the Fed lowered the reserve rate and everybody was, freaking out and everything was going really well. And then rates ticked up just a little bit, but don't worry. The good news is they are right where they were this morning. So, which is the lowest they've been in, you know, probably a year exactly. Actually, I saw a post. So that's really good. As a homeowner, though, what's that mean for you? What's all this market hubbub? What's going on with, the real estate community? So we are doing live Q&A, and I have some questions queued up right now that we will kind of go through. But if you're watching this at any point and you do have a question, if I see it on the live stream, I will certainly answer it. But if not, in the comments, I'll shoot you a DM and we can hammer that out, or maybe I'll create the next live around that question. So please put your questions below. I would be happy to chat with you about anything and everything. But for right now, if you are in the Denver market, you're looking to buy, you're looking to sell, you have an agent, that's great. Use this information just to help your search. If you don't have an agent, or you know somebody that is thinking about buying or selling, I would love to sit down, have a strategy call with them, and make sure that I can be a resource to them. So let's get rolling. So, is Denver's market crashing? No, it is not. There's actually a stat out there that the median home price has fallen $500, right? So an extremely small amount compared to, the appreciation that we've seen. So that's super important. What you also hear is that there's 18,000 homes on the market. This is something that certainly is created by, the supply and demand slowing down a bit. Homes are still selling. Sellers just are in a completely different world than we were 2, 3, 5 years ago, where it seems like things are just, everything's going their way, right? And that's something that we really need to focus in on and dial in on, is that buyers are able to have a little bit of, leeway. They're able to ask for things. Right now, the trend that I'm seeing on my listings is homes go under contract, and then, the buyer's going to go for blood at the inspection. And sometimes that works out, and sometimes the sellers say no. And sometimes, even if the sellers say yes, the buyers walk away. So transactions are extremely difficult right now. There's a lot of emotion involved. There's high stakes in the cost of, regardless of if interest rates are lower than they've been for the last 12 months, they're still paying high mortgages, on the back end for the new ones, compared to maybe what their last home was, or what the homeowner's mortgage is, because those rates just, were incredibly low for a decent amount of time, and a lot of people took advantage. So is the market crashing? No. Is inventory going up? Yes. We have so many economic and socio-political issues going on right now that there's some things that could change our way of life. And, that's going to have an effect on the market. I'm not here to tell you that the market will never crash. However, what I always say is, if the market does, decrease a little bit and you don't have to sell, just wait a little bit and it'll rebound, and we'll go from there. So the answer to the question, is the market crashing, is an astounding no. So let's dial into the next question that I have here. And if you do have questions, please put them in the comments below, because live questions are fun. Test my knowledge as we go. And as always, if you ever have any questions or need anything, please shoot me a DM. I will make sure that we dial that in and make sure you get the best experience possible. Should I sell my home now or wait until 2026? This is a loaded question. It's general on purpose, but it's a question I get often. And the bottom line is, if your house is sitting vacant and, you're just sick of being a landlord, or you want to put the money somewhere else or whatever, there's no reason not to have it on the market, right? It's just how it is. Now, one thing you could do, and if you are thinking about selling your home, heading into the spring or whatever, please reach out to me, because I would love to get pictures right now before the grass changes, or maybe when the leaves change, but they're still on the trees. So that if we do list in February or March or April on a snowy weekend, we can have the beautiful pictures of your well-maintained landscape and all of that. So if that's the case, please do that now. You can comment, pre-listing pictures below, or you can shoot me a DM. Maybe you're not wanting to put it out there to the Facebook world that you're moving. So should you sell your home now or wait till 2026? That answer is completely dependent on what you're trying to do, what the strategy is behind it, where you're going. The truth is, if you have to sell or it's sitting vacant and it's costing you money, there's no shame in putting it on the market. Here's the deal. I've traditionally wanted to hit the market first week in April. I have a listing that's still under contract that we listed April 1st, and the seasonal the seasonal pickup was not what we thought it would be this year, based on the market, based on the interest rates staying, high, and those kind of things, even going up during that time. So the market is seasonal, yes, but it's fully dependent on a lot of other things that we don't control. So make sure that you're focused on that, and make sure your unique situation is there. If you have to sell or you're not living in the house, yes, we're going to put it on the market. We're going to market the heck out of it. We're going to do everything we can. We're going to set expectations. Hey, these are the average days on market. We need to see this amount of showings, or we may, be a little bit overpriced for that specific market. And then there comes a time where it's like, okay, well, should we rent it out for a little bit longer here, since this is kind of what we're seeing in the market? And I will give you my promise that I'll be 100% transparent with you. I'm actually one of the worst realtors out there, because I try and convince people not to sell their houses and hold on to them as rentals, like I have done. So if you're interested in the house hacking, the rental piece, holding on to those, building wealth that way, and you're just like, well, Jeremy, how am I going to get to the next home? Send me a DM, we'll chat. I will dial it in. That's what I'm passionate about, because that's what I've been able to do to build wealth on my own. So I would be happy to help you, no matter where you're at, where you're getting started, how old you are, because I truly believe in building wealth through real estate. Cool. Next one is, will mortgage rates drop in 2025? Well, unfortunately, I am not a lender, but this is a question I get often. The way things look, I don't know, is the answer to that question. There's a lot of people that are talking about rates. They're going to drop here, they're going to drop there. Marry the house, date the rate. You will not hear me say that unless it's poking fun at the ridiculous thing that was marry the house, date the rate. So what I would say to you in the event we're talking about interest rates is, the interest rate really doesn't matter, because if the interest rates are high, sellers are going to have to provide concessions to buy down the rate anyways. If the interest rate is lower, that's great, but does it really have a major effect on your situation? The truth is, right now, with rates sitting, just below 6.25, 6 1/8, whatever they're at, depending on your situation, completely dependent on your credit, your scenario. So people throwing out these interest rates are talking about the perfect scenario, the perfect time, the perfect credit, all of it, right? So if you are focused on that, I promise you that if we would have bought a house a month ago, I could have gotten a seller concession on the perfect house for you to buy the rate down. The seller's going to pay for that. They're going to help us out. But that's what I want you to hear, is that the rate as it sits doesn't necessarily matter. If the rates do come down, great. The seller's going to quit providing concessions. If the rates go up, the sellers are going to have to provide concessions to keep the demand, happy, because the truth is, it's not multiple offers all over the board anymore. There are some perfect house, price below market. Those things are going to bring multiple offers. However, if you have an agent that's sitting out there gloating about having multiple offers, either they did an amazing job helping you prepare and get it staged and it's perfect turnkey in the perfect location, which they had no control over, or they're lying to you. Because all of the agents, top producers to brand new agents that I'm talking to, do have certain listings that are sitting on the market. The question is, are they overpriced? Should we just slash the price? No. Right? We will intentionally, then we will have a market crash if agents are saying, the only way to sell this house is cut the price. Right? So the right expectations, the right data research, and all of that goes into, this question. However, will the rates drop in 2025? My answer is I don't care, because ultimately, if you need the rate to be down a point, we can find a house where the seller can contribute to get the thing to that that number that you need. And it might take a little bit, right? It might take a little bit to find a seller that's going to be able to provide that. But if that rate is available on the market, I have the lenders that can certainly get it for you. So that's exactly where I'll leave that one. Is it cheaper to rent and buy in Denver in 2025? The truth is, it is cheaper currently on a month-to-month basis to rent a home over buying it. Okay. When you rent a home, you sign a lease for a short amount of time, a long amount of time, and your rent stays the same. Truth is that my taxes and my insurance can go up year over year, right? If you're in a lease in one of my houses and the taxes go up, yes, I might bake it into the next, rent cycle. However, I can't raise it on the lease that you're currently having, as we go. There's lots of rules around that. So it is cheaper per month out of pocket expense to rent right now than it is to buy. However, when you're purchasing a home, there's a lot of other things at play. You're having, you have the principal that you put into it. So you have that down payment as, obviously equity as you go. And then every month you're paying in your principal. So there's a principal buy down. So that equity grows. And then typically over the last 65 years, you've seen some appreciation. So that is another form of building that wealth. Now you do have control over, those increases as far as insurance. You can go shop another insurance rate. You can, contest your taxes. You can do a lot of things. And, granted, it's going to be a very limited, increase depending on, HOAs and things like that. But the truth is that yes, it is cheaper to rent than buy. However, when you are ready to buy, because it's not cheaper in the long run to rent than buy, will it be cheaper to get into a house then than it is right now? And the answer is, I don't know, right? You can get in, you can manage your mortgage payment through refinancing and that kind of stuff. If the interest rates do come down or you build up equity and you want to do something with it, you can certainly, build that stuff in. But ultimately, in the long run, it's far more expensive to your wealth to rent than it is to buy. Our home price is going to crash. We've kind of covered that. The only way home prices crash is if real estate agents and sellers just yard sale stuff, right? And I've had this on a couple occasions, listings that I've had where, big time investors just needed the money out, or, people bought a new house and they're moved into the new house and they just need it gone. Well, then they're going to slice the prices based on that. But home prices haven't crashed yet. And I think that we're kind of we've seen the maximum interest rate kind of deal. And we've seen the insurances and the taxes and HOAs kind of go up. So I don't foresee home prices crashing in the near future unless we artificially are just throwing prices out there willy-nilly and not representing, the clients, unless that's what they want, and just, pricing homes to sell because of our pocketbooks and not our clients. So that's something I really want to caution people on, is sometimes real estate agents know the data, know the stats, do all of that, because sometimes the price reduction is just not the reason it's not selling. As evidence of, hey, we lowered the price and we still don't have any activity, right? Unless you're completely off on the price, it could be a market thing. And we don't control that market. How do builder incentives affect buyers? This is something that's super prevalent right now. Builders are saying, okay, yeah, we're going to buy down your rate. You can get a 4.99 or a 3.99 or whatever that looks like. And at the end of the day, you're just financing that buy down, right? Because the builder is still keeping that kind of premium price up there. And then they're saying, okay, yeah, we'll give you a 3.99% interest rate through this cash to close at $40,000. You look at the mortgage payment, you're like, that's great. But ultimately, you are financing that. So instead of them lowering the price and netting exactly the same amount, and you not financing that, and you not paying interest on that $30,000 or $40,000 over the next 360 payments, they're just saying, yeah, here, our net's the same. So if we sell a house for $650, we're going to give you $30,000 to buy down the rate. It's going to get you to 4.5%. And, we're going to walk away with $620, right? $650, $30,000 gives you $620. Or they could just leave the interest rate the same by, give you $30,000 off of the price. You're not financing at that point, but you're going to have the higher interest rate, the market interest rate. So kind of something to think about around that as you go. Typically, buyers are focused solely on that monthly mortgage payment, and that's where they kind of stick and they're okay with it. But ultimately, you are financing that difference. And if the builder is willing to give you 30 grand off, it's probably worth a consideration in those higher price points. Should I renovate or move? Also, actually, on that one, on the builder incentive, if you think about this and you're like, okay, well, this is going to be the 2 to 5 year plan, you're going to have that $650,000 financed, and you may be technically underwater because the house is probably worth 625. The appraiser was like, yep, it's good. The other one sold for that. But when it goes to market, as long as the builder's out of the way, and not giving those incentives against you, which is a problem, but you're going to have to get that 650, 675, and then you also have fees in order to sell your home. So that's where things get a little bit sticky, especially on the new builds. And for some reason, people that buy new builds often tend to want to move into the next new thing, right? And so I've had clients that have gotten away with this through the high appreciation days, and it was okay through limited inventory and whatever. It's not so much the case right now. It's not a guarantee. So should I renovate or move? This is something that's completely up to you. If you are, you love your neighborhood, you love where it's at, and you have one extra kid and you have the ability to pop the top or finish the basement or, build a add-on addition, that it might be worth it, right? It's my experience when you change the roof line of your home, it typically gets pretty expensive. If you're finishing a basement or, creating more finished square footage, it's probably worth it. Now, the thing I want to bring into this is, what does your debt look like? If you built up a bunch of credit debt and you're trying to pay that off, too, and, all the things, like if you have a 20% interest rate on a credit card with a $30,000 balance and you're so in love with your 3.5% interest rate, but you could roll it all into a 6% interest rate, look at your monthly, right, cost and interest paid, and see what works and what doesn't. That's, kind of my advice to you on that for sure. But I mean, let's look at the renovation costs. Let's look at your long term. You're not going to get dollar for dollar for any improvements. I know that sounds crazy, but it's just not the case, based on, the expense of the permits and, the architecture and all of that, especially if you're changing the roof lines as you go there. Some of you might have a good roof line that you can change easily, but most of the times that's where things get really expensive. What does buyer's market actually mean for me? So buyer's market, I would say we're technically in one. Buyers are being able to, negotiate on the front end. They're able to negotiate at inspection. There's not typically a bunch of them lined up. So a buyer's market means you have a little bit of incentive. But as a seller, like if you need to sell, the truth is, especially most of you have had your homes through the crazy appreciation years. Yes, you got an email that said your home was worth $1 million. Was it really worth $1 million? Well, no one that sent you that was in your house and told you that. Maybe, right? It might be worth 900,000. But did you ever really have that money, right? So if we don't look at that as a loss, I think we can go a lot further as we go. So again, market Q&A. If you have any questions, put them below. If I don't see them before this live is over, I will certainly reach out to you. You can always shoot me a DM if your question feels a little more private or it's about your specific home. Always happy to help. Always happy to answer those questions. Promise I won't make you sign up for me to sell your house if you reach out with a question about the home you own. Is it smarter to wait till 2026 to buy? That depends on a lot of things. If you're in a lease, that you're comfortable in, you're in a spot that's good, you don't have a major life event that's going to come up, like having a baby in the meantime, I would not suggest moving with a 6-month pregnant wife or a toddler. I have moved with a toddler and it was fine, but it's not ideal. So it's your current situation that matters. If you're waiting for the perfect interest rate or the perfect incentive from a builder or the perfect house to come on the market, perfect usually doesn't exist unless we're on that onto the dream home kind of thing, which usually it doesn't necessarily matter as much. So the 2026 waiting game, you never know. It's my prediction that we will see rates stabilize or even go down, which will be good for the market. However, that's not guaranteed. If that happens, I think that more buyers will come to the market. You'll also have that segment of buyers that are like, okay, I'm done waiting for rates, and they'll come to the market. That's usually the spring people that we see kind of in the influx, even in these tougher markets. So is it smarter? It could be, but I'd say getting into an investment, having the time to kind of make a plan and strategize is probably a lot smarter than just waiting on a specific time, that perfect time to buy a house. How can I build wealth if I buy now with higher rates? Basically, this is a question using leverage. You could certainly give it a shot. It's not quite as easy. So if you buy now, if it's really about wealth building and it's an investment property, you can probably look to different markets outside of the metro area, whether that's Northern Colorado. Northern Colorado is pretty hot too, but some of those outlying areas that I've been so lucky to explore lately certainly should be options. So that's one way to do it in different markets. There's also like these crowdfunding, group funding things. If you're interested in that and say, hey, I have 25K, I don't really want to manage it, I kind of want to, partner. I have great partners that have some of those opportunities who I can connect you with. I don't necessarily authorize any of them or have any part of that transaction, but it's certainly a way to get into investment if you don't have that 20 or 25% down to put towards an investment property, or you don't have the means to manage them or whatever. That's certainly an option on how you can invest and kind of get into it and be a little bit shielded from the rates, and make sure you're vetting those people and you're making sure that they have a plan and what they're saying is legit. But I certainly have some ideas for you there if you want me to connect you with people for you to do your own research. But also, if you're buying now and you can cover the mortgage and you're betting on principal buy down and appreciation eventually, it's a long-term fix. It's not going to be Bitcoin, which has kind of ruined our investor mindsets, but there's certainly strategies if you're willing to wait and be patient and go into them. So I'm happy to talk to you all about that. Also, there's little things like ADUs and house hacking and renting a basement. If you've been following, that I just recently turned one of my long-term rentals into a midterm rental. That increased our monthly income for sure on that one. So some ideas that we can kick around to make it smart. The truth is, buying real estate from an investment standpoint is a long-term game. However, the cool part is you're benefiting from appreciation. You have the tax write-offs, and someone else is typically paying down your principal. So that's the beauty of renting. You're providing a stable home for somebody to live in, and all of that. So if today's Q&A helped give you clarity, please comment a thumbs up below. I would be happy to hear from you. If you watch this and you're one of the lurkers, at least shoot me a message because we're working on trying to get some engagement. So I want some of you guys to engage and go from there. But it's been so cool to do these lives and talk about the market, and this transition from Why Invest Wednesday to the Mile High Market Mastery is something that I enjoy. Right? I enjoy talking to people about the market. I enjoy strategizing. I enjoy helping people build wealth. So if that's you, you can book a call in the link below, put a comment below, reach out. Don't be a stranger. And thanks so much. Like, comment, and subscribe. If you're watching over on YouTube, we'll see you soon. Bye-bye.